Thank you very much, and good afternoon, ladies and gentlemen. Thanks for being here and listening to this panel. It should be a very entertaining and interesting panel. It's a privilege to be up here with a great group of people with a lot of insight into this industry. Let me introduce you quickly to the panel. Seated to my immediate left is Madeleine Whitaker. Madeleine is Vice President of BG Canada. She was appointed Vice President in September 2013, leading BG's Canada team in developing the Prince Rupert LNG project. Before moving to Canada, Madeleine worked as aide to the Chief Operating Officer. She joined the company in 2007 to manage government relations in the Europe and Americas region. Before joining BG, Madeleine spent 10 years working in and around the European Union in Brussels, specializing in supporting multinational companies on EU policy lobbying, strategy, and reputation management. To Madeleine's left is Barry Munro. Barry is Ernst & Young's leader for the Oil and Gas Industry Initiative in Canada and Senior Vice President of Ernst & Young Orenda Corporate Finance, based in Calgary. He specializes in all facets of corporate finance, including strategy, mergers, acquisitions, divestitures, valuations, and financings. He has extensive transaction experience working in the energy industry. Barry holds a Bachelor of Commerce degree, is a CA, and holds broker and dealer securities registrations in both Canada and the US. To Barry's left is Greg Kist. Greg is president of Pacific Northwest LNG, a subsidiary of Petronas, which is seeking to build an LNG project in Prince Rupert, as you well know. Prior to this, he served as VP Marketing, Corporate and Government Relations at Progress Energy Resources Corp, and as a member of the executive committee that initiated the Petronas Progress joint venture in 2011. Prior to joining Progress in 2004, he was Manager, Investor Relations for Encana and its predecessor company, Alberta Energy Company, all the way since back in 1997. To Greg's left is Doug Stout. Doug is Vice President, Energy Solutions and External Relations for Fortis BC. Doug joined the company in 2001 as Vice President, Gas Supply and Transmission. He's held senior roles with Belcorp and Husky Energy and has served as a director for Sultran Limited, Pacific Coast Terminals, and Hillsborough Resources. He is currently a director of the Northwest Gas Association and the Canadian Natural Gas Vehicle Alliance. And last but not least, on the far left, Jock Finlayson. He is the Executive Vice President and Chief Policy Officer at the Business Council of BC, an organization representing 260 large and mid-sized BC companies and affiliated industry associations that together account for approximately 1/4 of all jobs in the province of BC. He previously served as Vice President of Research at the Canadian Council of Chief Executives, and prior to that worked in the market research field and in management consulting. You join me in welcoming the panel, please. Thanks. Similar to the last panel, our format here will be the same. We'll have initial presentations from each of the panelists, and then we'll follow that with a Q&A session. Audience members, I'd encourage you, if you have a question, to please write them down on the card, hold the card up, and a runner will come and collect that, and I can put those questions to the panel. So on with the show. Let's start with Madeleine for the first presentation.
Thanks, Ron, and good afternoon. I'd like to say a few words touching briefly on the global context for LNG and what we consider to be BC's competitive advantage. It is clear when we look at the LNG market today that the world will need LNG from BC, and BC is well placed to provide it. As we heard in the previous panel, demand will continue to grow strongly, and the industry is facing a range of challenges in bringing on new supply. The result is that the market will remain tighter for longer. We see a supply gap of around 150 million tonnes by 2025, and we expect only about 60 million tonnes of that to be met by US exports. We know that supply sources other than the US will be needed, and we see a clear role for BC LNG, especially when you consider that buyers want diversity in their supply portfolios. In this global context, then, BC is in a strong position. There is a massive resource base of over 1,200 TCF. The shipping distance to Asia, as we've heard, is a major advantage, around 4,000 nautical miles to Japan, which is less than half what it is from the US Gulf Coast. and there is a thriving resource industry with established infrastructure and an experienced workforce. At BG, when we look at our LNG project site on Ridley Island, we can also add the further advantages of a deep water port, road and rail infrastructure, and local communities who are engaged and eager to see the economic benefits associated with industrial development. So yes, BC is extremely well placed to attract investment and develop this industry. But of course, as we've heard, BC faces real competition for this investment. In BG alone, we are also developing options on the US Gulf Coast and in East Africa. So you have to ask, what can turn the BC opportunity from good to great, from compelling to irresistible? The key point I'd like to make here is that with projects of this scale and complexity, it is critical to have a strong control over costs. Elements that add to cost uncertainty are naturally very concerning. From a BC perspective, those uncertain pieces at the moment are the fiscal and regulatory framework and how they will impact the full project economics. And there is also the question of the availability and cost of a skilled workforce. And those of us with recent experience in Australia know only too well how that can affect your bottom line. So this brings me to the final point on my slide, and that is the critical advantage that stems from a government that is supportive, active, and engaged. The BC and federal governments recognise the risks facing our projects, and they're dedicated to helping us find solutions. They're prepared to engage with industry on the detail of these challenges and what it will take to meet them. They continue to be open and committed in discussions around the fiscal and regulatory regimes. And at the same time, the Premier's Labour Working Group is bringing relevant parties together to discuss how best to ensure that the right workforce is there when industry needs it, and that British Columbians are ready and able to seize the employment opportunities that LNG will bring. With strong partnerships, continued commitment, and an approach that remains focused on the scale of the global opportunity, we can be confident that the right foundations are in place to make sure that the BC Advantage can deliver not only for the industry, but for the whole of the province and its people. Thank you.
Thank you, Madeline. Insightful? Great. Barry, on to you.
Sorry, Ron. Thank you very much, everyone, for the opportunity. And I guess what I thought I would try to do is add my little bit as an advisor in the middle of a bunch of project proponents who are risking their own capital. And Madeline, you talked about how you take this good opportunity and turn it into an exquisite one. I was going to say make sure you hire the right advisors, but that would be kind of cheeky. What I thought I would do, and I'll take the advantage of having discussed sort of BC's LNG opportunity with my partners around the world in almost every jurisdiction and projects. And I tried to build a framework coming out of that, of the 4 or 5 things that I think matter to BC and how you're going to have to create a competitive LNG business and capture this BC opportunity. It is interesting, Madeline, you said that from a BG perspective, they see the need for BC LNG opportunities. Andy on the last session was blunt, that he didn't think there was a great LNG opportunity. It was really up to BC to take that opportunity as opposed to alternatively. I really think there's 5 factors that drive kind of the competitiveness of the BC industry, or all of the things that we're trying to do to make sure BC industry works. The first bucket is really around global competitiveness, and that's not only just, gee, we're close to Asia, or we're as close to Asia as Australia, but that's really understanding where sort of BC projects are going to fit within the global portfolio of companies like BG. And it's also the blunt reality that at 4 a.m. in the morning, Prime Minister Putin stays up to sign a gas supply agreement that surprised everybody, but frankly, it's been 10 years in the making. And so there's many competitive factors against LNG. And frankly, from a global perspective, we're at the early days of watching a regional global natural gas business evolve. That's what LNG is going to do, and that's what companies like BG are doing, of trading around that. The second big process is what I think is around kind of people's processes and costs. And it's not sufficient just to say we're not going to do what we did in Australia, or frankly, we're not going to do what we did in the Canadian oil sands a decade ago. This is really fundamentally figuring out how to do innovative business process where costs matter. And frankly, it matters in a world where the future outlook for commodity prices is flat. And so no project is ever going to get bailed out by increasing commodity prices, which has really happened in the energy business for most of our recent memory, and that's because we're moved from this world of a scarcity model where all decisions were made, investment decisions around the scarcity model, to a world of abundance, and that's what's made LNG viable. So costs matter, getting to innovative business processes and models matter, and that was the excitement about the announcement yesterday of the project proponents, including Greg's company, coming together to find innovative ways to make sure that we manage sort of the cost equation. Mr. DeYoung talked about fiscal policy, and I think the relevant message there is almost everybody can remember that sort of a few months ago it was all about what's the rate in the BC LNG tax. What's this BC LNG tax going to be? I think the important part to really focus on, and I think I hear the government doing the right things, and I know that they're consulting with all of the industry proponents, is that it's really the total government tax take that's going to matter, and there's many parts of that overall take, and you really, to get to a competitive fiscal regime, have to consider all of those parts. And I think we heard the CEO of Petronas say this in a very clear, deliberate, unequivocal manner: give us clarity, give us certainty, so that we can make the appropriate investment decisions. Capital allocation. So we woke up in 2014 in the energy business to find out that every major energy company in the world is now focused on capital allocation processes. Portfolio rationalization was rampant. Every company was faced with profitability challenges because costs have accelerated at a much greater pace than sort of commodity prices, and so that's pressures on virtually plays on their projects kind of everywhere in the world. And so this whole notion in BC that LNG is a given is not. I think FID is a real process. It is a real, and Greg's living it sort of in a very dear manner. And so I think that what we have to understand is that global players, who are the ones that are driving the LNG business in Canada, are going to have to compete for capital globally. And that's something different that we knew even a few short years ago in Canada. And the best projects globally are going to succeed. One of the things I'm hoping to pick up at the end of this conversation or through the panel discussion is I'm also fascinated by this notion that when you think about the LNG play, at least in my calculations, 80% of the costs are actually going to be upstream spending. And so I think where project viability is going to be made or broken may well be on the upstream spending or midstream spending element of it, and so we're going to have to figure out how to get that right too. Then lastly, and maybe most importantly, First Nations, and everybody understands the communication, the consultation, the engagement, the partnership notion. It seems to me that this may actually be the greatest opportunity in the room and also the greatest challenge. The great opportunity is to bring our First Nations into full partnership with us as we develop this great resource. The challenge will just be getting that right. And in some ways, I think, Ron, and I'm interested to hear the rest of the panelists' view on this later, is that in some ways I don't think it's so much cutting the business deal, so to speak, to be a kind of crude way to describe it, but it will be about implementation of whatever the agreements are, standing those arrangements up, making sure that they're actual real and viable and manageable going forward. And so I think the implementation will be the important part about that. So at least from my perspective, those are the elements that we have to get right to make sure we have a viable BC LNG industry.
Barry, that's a great framework and lots to discuss there. Greg, let's move on to you.
Great. Thanks very much, Ron. Appreciate it. And I'll just take you through a couple of slides here just in a moment. But you know, an opportunity like what we have facing British Columbia today really takes vision. It takes vision on the part of a whole number of people, a whole province, maybe even a whole country, vision of communities. When I think back to where we started with Progress Energy and what we've built, and I remember back in 2009, 2010, Mike Culbert, the president and CEO of Progress Energy, recognized we had such an incredible, vast resource that we had built in the North Montney, but there was no way you were going to be able to capture that opportunity by selling gas into North America. Obviously, we saw, as Barry noted, you know, the price curves, the forward curves in steep backwardation. You really needed to create the opportunity to find additional export markets. And so we embarked on that time on a joint venture process, and through that process ended up in a joint venture with Petronas. And although I wouldn't encourage my daughters or counsel my daughters to live together before you get married necessarily, I think what that did for us was it really, I think, opened Petronas's eyes to the scope and scale of the resource that exists here in British Columbia. And further to that, when you think about the scope and scale of that resource, it's actually the ability of the service sector, or the midstream sector, of the companies here to actually access that resource, to put the brain power, the technology together to extract that resource. On top of that, we have in British Columbia what I think is a very good royalty regime that actually encourages development of those upstream natural resources. So, you know, when Barry talks about, you know, the significant part of the capital in these projects that are going to be going into the upstream, obviously having a royalty framework that encourages that investment in the upstream is certainly going to help contribute to the you know, positive economics, and obviously help us to get towards a final investment decision. In Western Canada, in British Columbia, obviously we have a very well-developed service sector, a service sector that has put technology to work and has figured out ways to coax more and more of that natural gas out of that rock. And really that's put us in the enviable position of having a massive resource. But again, as Tansri talked about earlier, it's in a sense a stranded resource at this point. And so unlocking that by building an LNG facility on the West Coast, we think is going to present tremendous opportunity for the province and for the country. When we think about building an LNG facility on the West Coast, we've chosen the Prince Rupert Port Authority, the area to build in, and that's the territory of the Tsimshian Nation, who I think are going to be a very, very big part of what we hope to accomplish up there. And when you think about building in British Columbia a facility of this nature, there are certain technical attributes as it relates to building a facility on the West Coast, an LNG facility. The first thing is we've actually got sweet natural gas, pipeline spec natural gas that's going into this facility. So we actually eliminate a certain part of the equipment that's normally necessary to handle raw gas. So we've actually got an opportunity to reduce some of the capital cost components of a facility like that by having pipeline spec gas here in British Columbia. Secondly, relatively temperate climate, and it's not so much the lower temperatures as it is a fairly narrow range of volatility in temperatures, which effectively will, you know, for the same amount of horsepower in, will give you more LNG output. And so we certainly think there are some attractive attributes just from a pure facilities perspective. And then as my map shows there on the screen, you can obviously see the shipping distances to markets. That curve should probably be actually over more the northerly part of the globe there, which is really the shorter route to pursue those markets in Asia. But this is the competitive landscape that we're up against. As Tansri mentioned, we're talking about a $36 billion investment in LNG in Western Canada, but we are competing against the world. We're competing against cargoes from all over the world. So it's one thing to talk about how people want exposure, buyers want to expand their portfolios. They want to expand their portfolios from an economic perspective. They certainly like the attributes that they see in Western Canada. Obviously, when you look at our project as compared to the other projects that are out there, we're a fully integrated project, right from the upstream right to the offtake. Fully integrated partners, meaning we're fully aligned in terms of our interests. We think those are the characteristics that actually help us to move fairly quickly and move to an FID decision by the end of this year. But that opportunity is really driven on, obviously, first off, ensuring that the fiscal framework, the fiscal environment in British Columbia is attractive for the investment, that the environmental assessment processes are robust, that they address the concerns that are in the communities today, and that we address those, but they have to be addressed in a timely fashion to allow us to make that final investment decision at the end of the year. And so we think all of those things are coming together, and so we're pretty excited about the opportunity that sits in front of us, and I certainly look forward to talking a bit more about that. Thanks, Ron.
Thanks, Greg.
Thanks, Greg. Well, I'll approach this from a slightly different perspective, I think, than, say, Madeleine and Greg with their projects in the north. But first, I'll just tell you a little bit about Fortis BC, because a lot of you probably don't know about it. We're part of the Fortis Inc. group of companies. We're the largest investor-owned utility business in Canada, and we operate across in the U.S. as well as across the Caribbean. And the biggest portion of our $18 billion asset base is here in British Columbia, focused on gas and electric solutions and delivery. And as you can see, we serve 135 communities across the province, including about 90 First Nations communities within that scope, so a wide footprint across British Columbia. And our business is about energy delivery to end users kind of 24/7, 365. And we've been in the energy delivery business for over 100 years across Canada and over 100 years here in British Columbia. So what are we focused on and looking at from a different perspective, I guess, than the northern projects? We have two existing LNG facilities here in British Columbia, small peak shaving plants. And the one in this picture is on Tilbury Island in the Vancouver area on the south arm of the Fraser River. We're currently expanding that plant. It's only a $400 million project right now. We have the ability to take that probably 5-6 times that size over a period of time. And right now we're serving domestic markets, plan to serve more domestic markets with that, with the LNG from that project. That's targeting natural gas and transportation, road, BC ferries, a great cost to the government and folks in BC, rail companies, mining companies, et cetera. And what we're doing with that, what the province has really encouraged here in BC, is not only developing the export opportunities for British Columbia and the value that's being driven there, but show ways that we can use that LNG, produced LNG, and use natural gas in different forms here in the province, drive down the cost of doing other forms of business in the province, and get really greater bang for the buck overall when we look at the development opportunities here. You'll see other projects going on in southern BC, southern LNG opportunities, much smaller scale than what's talked about in the north. This is a picture at near Squamish. You've heard of the wood fiber LNG project that the Premier mentioned today. So that project is under development, about 2 million tons per year, as would the potential Tilbury build-up be 2 to 3 million tons a year. And these are targeting smaller scale markets, different opportunities, but leveraging not the brownfield or existing LNG facilities, but brownfield industrial sites, access to existing pipeline capacity within BC, both the Spectra system from northern BC and our own distribution system. So looking for ways to bring projects on stream a little quicker, albeit smaller scale, with hopefully a few less issues to deal with by leveraging that infrastructure and driving some other benefits throughout the province. So seeing an early entrance to the market in the 2016-2017 timeframe for these projects to help, I think, show the way a little bit and take advantage of that first mover opportunity that we see there. So that's building on what I would say, and I think Greg mentioned it here as well, the long-term reputation of the energy business overall in British Columbia, right from the upstream through to the end use, and people seeing, I think, a very reliable industry, a safe industry, a community-focused industry, a First Nations respectful industry, and all those are important to developing this business. And I think that's really what comes across is this whole value chain, the whole opportunity, and the ability to use this energy not only for export, but to further other industries and businesses within the province.
Thanks, Doug. Doc, over to you.
Well, thanks, Ron. At the risk of precipitating a premature rush for the exits, I'm going to approach this from a kind of an economist point of view, a little different from the previous speakers. And I'm going to begin with what I would call kind of a macroeconomic context for looking at the LNG opportunity in BC, and then talk a bit about where I think we have some competitive strengths that we bring to the table, but also some areas where we're challenged. And just on the kind of overall economic setting for LNG, I think it's important to recognize that BC, like some other provinces actually, has really struggled to expand our export base in recent years. We've really seen the value of the province's international exports sort of hover between $28–33 billion a year going back for a full decade. And indeed, last year, they were no higher than in 2008, and exports were actually lower than they were in 2005. So as a small open economy, we need to nurture the development and growth of what we call clusters of traded industries. These are industries which can basically generate export earnings or income flows into the jurisdiction, as opposed to just recycling and recirculating revenue from economic activity that takes place within our borders. LNG, I think, is a great prospect for augmenting, broadening, and deepening the province's export base. I could easily see that with even a modest industry coming to root in BC, we could see a $3 to $5 billion a year increment in the value of our international exports, which would be 10 to 15%. That would be very helpful to us. And it's one of the reasons why in the Business Council we're very supportive of pursuing LNG. The benefits from LNG development are actually in some ways similar to other resource industries, and we've got good data, good analytics around this in BC. Resource industries in the context of this province do have a strong positive multiplier effect on our wider economy. The reasons are summarized on the chart in front of you. They export most of what they produce, so there's the first factor. 70 to 100% of production typically is actually exported out of the jurisdiction. They pay well, relatively high wages and benefits, which are the kind of employment we actually need to increase in BC. Once resource facilities are up and running, not necessarily when they're being constructed, but once they're built, most of the business inputs that are used to run the operations are actually sourced domestically. So the raw material, the energy that's used to power facilities, the labor content, a lot of the transportation, even a fair number of the business services, little bits of the M&E, a lot of that is sourced within the local marketplace, which sort of augments the overall economic impact. We already see that in the energy sector. It would continue with LNG. Corporate BC, primarily here in the Lower Mainland, has been strongly influenced by the strength and development of our resource economy. About a quarter of the top 100, 200 companies in BC today, measured by revenue, are actually resource companies or companies that are closely linked to the resource economy, like the Port Metro Vancouver. And finally, of course, resource industries do constitute an important component of the revenue base for government, particularly the provincial government, which collects substantial direct and indirect revenues thanks to the production and export activity of our resource industries. So there's a big macroeconomic upside, I would say, to the province if we're able to move forward successfully with LNG. Where do we stand from a competitive point of view? What are some of the advantages? We have a high-level assessment. Other speakers have already referenced the strong resource base. That obviously is sort of the ace in the hole. Asia-Pacific location and climatic conditions. The minister commented on the relatively strong fiscal position of BC. I don't think that in and of itself is going to drive investment decisions, but it's helpful. It certainly creates a more positive context. There are jurisdictions elsewhere in Canada and obviously around the world where public finances are completely unsustainable in their current form, which creates, I think, uncertainty for anybody looking at long-term investment decisions. That is not really the case here, so I would put that in the plus column for BC. We have a strong commitment from government to pursue the LNG opportunity, and I would also note, just by way of a footnote, I guess, that the main opposition party in our legislature, at least in terms of the statements they've made over the past year, also seem to be broadly supportive of pursuing LNG, and I only emphasize that because that isn't always the case with economic development policy debates that the two major parties are in broad alignment. Some elements of our tax system, I think, are favorable from the point of view of the LNG industry looking at investing in the province. I would emphasize three. We have low statutory tax rates on corporate income. The combined federal-provincial statutory rate is 26%. That's lower than most other provinces and quite a bit lower than the United States, so that's certainly a strength. We have low payroll taxes in Canada and in British Columbia, where we have no general purpose provincial payroll tax. People often don't talk about that, but it does have an effect at the end of the day on labor costs and overall competitiveness. As analytical work done for the BC Jobs Investment Board showed, the upstream royalty system that's evolved in British Columbia, and as Greg mentioned, has been part of the reason for the success and growth of the industry. So those are strengths, I would say, in our tax competitiveness. Where we're challenged on the tax side, there are areas. I would emphasize the uncertainty about what this LNG income tax is going to look like. The minister referenced it. Clearly, the way it's designed will impinge in some way on the ROI of investment projects. Policymakers have to be conscious of that. The carbon tax, BC being unique in Canada and indeed North America in having a general purpose carbon levy that applies to most consumption of fossil fuels. It is a significant cost item for energy intensive business activity, so it is going to factor in some way into decision making and the costs surrounding LNG development. We've got a sales tax structure now in the past year, having gone back to a retail type sales tax with the disbanding of the HST. We've created a sales tax structure which is a disadvantage for all investments in capital, particularly capital-intensive industry, manufacturing. A lot of the business inputs that will be sourced in the energy industry and in the LNG industry will be subject to PST on construction materials, business materials, vehicles, some types of machinery and equipment, purchased energy, legal services, and a variety of others. So that has raised the marginal effective tax rate on capital in the province and is again going to have some role, I think, in the decision-making around LNG. And then finally, our municipal property tax structure, which I won't go into because we'd have to shut the lights right out and break out the candles. But our municipal property tax structure is challenging for heavy industry in British Columbia because of the design of the system with 9 property tax classes, with a lack of provincial control over what municipalities do. It creates some risks for long-term capital investments, and I do think provincial policymakers are alert to that in the context of LNG and may take some steps to mitigate the risks there. A final comment I'll just make is on the labor supply side. The good news here, as I think Madeleine referenced, the Premier created a task force, a working group that did some good analytical work around the labor supply side of LNG. A couple weeks ago, the province unveiled its revamped education and post-secondary training policy, which is going to move toward a reallocation of funding and programming to increase our capacity to produce people in high occupation fields. So that's going to be good over a period of years, I think not only for the energy business, but for industry in general. Having said that, we are challenged on the labor side. We've got slower population growth, slower workforce growth. We've got tremendous competition coming out of Alberta. We estimated the Business Council, we had a 42,000 net outflow of people to other provinces in the last 5 years, more than half of working age people. More than half of those individuals went to Alberta. We have another 30,000 or so British Columbians who are resident here, but actually earn most of their income from employment in Alberta. So Alberta is a formidable competitor for British Columbia in the context of skilled trades, technical occupations, project managers, engineers, a lot of the kind of folks who you would need to build up the LNG sector and the related infrastructure. The good news is maybe some of those folks can be enticed to come back home if we've got better jobs and higher paying opportunities in the province. We're seeing a bit of that in Atlantic Canada with some people from Newfoundland who've worked in Alberta actually migrating back home to take advantage of the stronger economy there. We might have some upside in BC there. Final comment I would just make about, I think, some unfinished business here. The province is really going to have to reconcile its climate policy framework and objectives with the opportunity to build LNG. At the moment, we have legislated targets for greenhouse gas reductions, domestically defined, that are not compatible with the growth of an LNG sector. That's going to have to be reconciled going forward. And government, when it put in place the current policy frameworks related to climate change, did so several years ago when LNG was not on the radar screen. And it's a big enough industry with a big enough carbon footprint, frankly, that it's going to require some rethinking and some retooling. Thank you.
Jock, thank you, and thanks to all the panelists. That was a lot of ground to cover from a variety of perspectives in a short time frame. So having done that, we do have some time for a bit of a Q&A. And I'd like to maybe pose the first question to the panel, tackling a couple of the items that have been identified as challenges. And one of those is arrangements with First Nations. I know a number of investors and foreign parties interested in investing in the jurisdiction have raised concerns about whether or not First Nation issues represent an issue or not. Are they right to be concerned, or can successful arrangements with First Nations be an advantage for BC LNG and the BC projects? Doug, maybe we'll get you to tackle that one first.
Sure. Well, I guess you asked the question, can arrangements be made? And I think most definitely they can. I mean, we've done projects in BC. We have a partnership actually on our project in Vancouver Island with 2 First Nations who between them own 15% of the equity in our project, and we put that in place a few years ago as a way to end up working together in a long-term relationship. And that built off of a relationship we had around a construction company and work that the First Nation was doing for us and with us for about 20 years before that. So I think the opportunity is there. I think one of the issues faced is just the sheer volume of you know, what's going on right now and trying to deal with it all at once. And I know the companies here and others have recently announced yesterday they're working together to try and to tackle the issue jointly. And I think that's probably one of the key issues of being able to have everyone have the capacity to deal with the number of issues that are out there to get tabled and dealt with.
Ron, I'll tackle that from the area that we're operating in up in Prince Rupert. I really see two tremendous opportunities here. One that I already see developing quite extensively actually is First Nations business joint ventures, and a lot of work has been going on in that front, you know, aligning themselves with you know, very strong operating companies and really building the capacity more for the longer term and to take advantage of the opportunity now, but thinking about the longer term. So we see from a business development opportunity, those things already starting to happen. Secondly, from an employment standpoint, we see a tremendous opportunity in our area here where we're going to probably need something in the order of, say, 300 full-time operators at our facility. And we think a large part of that workforce is going to be First Nations from up in the area that we're going to be operating in, the Tsimshian First Nations area. Certainly, there's going to have to be an extensive training program, but it would be regardless of who would be coming into the plant, because there isn't that LNG experience, a plant operating experience in Western Canada. And so that's something that we're going to be undertaking is training, job development programs that will be able to take people at all different skill levels and basically turn them into plant operators and provide those highly skilled jobs to those folks. And as I say, in our view, the First Nations are clearly going to be a very big part of that.
Ron, I think it's an area one is advised not to engage in too many sweeping generalizations. You know, there's 203 First Nations in the province. They vary a lot in terms of population size, approach to economic and social development, capacity. But the big trend, I think, in BC is there is more engagement. There are more partnerships. We did a survey of all our resource company members just a couple of months ago, and 45 companies from the full spectrum of our resource industry, including energy, responded. And most of them were actually pretty positive on the trends they see over time. There are bumps along the way, but there's progress being made. The province, I think, has done a pretty good job of making sure it's got a toolkit that it can work with to help facilitate economic development and get First Nations to the table and participating in the benefits. I would say in some ways I think we're in a better place in BC than some other provinces. I was in Ontario last year, and it's very surprising to see a province that has treaties all over the province of Ontario, but they're really facing some pretty big challenges in resource development in Ontario because of outstanding concerns with First Nations. So I do think we've got a good news story to tell in BC. There are challenges, but I do think LNG development is a big enough upside that it actually can bring people to the table. There are some resources that we can work with. There are certainly some benefits that can flow through the First Nations communities. So we're mindful of the challenges, but I would say our longer term vision on this is increasingly a positive one.
Great. Another item that the panel this morning focused on, and a number of the earlier presenters identified, was just the overall competitiveness of the industry. And in particular, you know, competition from the U.S., a number of brownfield sites, lower costs, coming online quicker and cheaper. Can Canada compete with those kinds of projects? Let's open that up. Madeline, maybe you first. Okay.
Well, the truth of it is that a lot of these Canadian projects are going to be more expensive than the US. Brownfield, greenfield comparison, you know, that's going to be the case. But when we look at the NPV of these projects in Canada, you can make fair economic returns. The supply is there, the demand is there. With the right project developer and the right customer, they can be built. And everybody talks about this massive tidal wave of cheap US LNG. You know, we just don't see that happening. Of all the projects that are on the books, we see maybe a maximum of a quarter of those going ahead. We see those being limited by, you know, developer capability, access to capital. There will be probably some strong public opposition to some of those projects. So they certainly won't all go ahead. And just looking at the scale of the demand, you're going to need alternatives. And BC is well positioned. Similarly, we've talked about buyers wanting diversity in their supply portfolio, and with that proximity with the Asian shipping distance, then BC is well placed. You're going to need it.
Ron, I might just add, like, people have to put this into context. So today in the U.S., they produce about 65 or 66 BCF of gas a day. So there's 40 BCF of gas a day of announced projects. Does anybody in this room actually think a U.S. politician, despite export permits being issued, is going to let 40 BCF of gas a day? It just won't happen. And so I think, Madeline, that's your point, that either through delayed processes or interference or opposition or rising costs, something that the U.S. opportunity will always be there. It's big, but there are different types of projects there. I actually think that the U.S. projects will be built. Greg, I'll be interested in your perspective around this, because you guys are directly competing against them, but they're built around sort of that Henry hub. I could do a tolling arrangement. Madeline, I think your company, BG, are one of the big off-takers of Cheniere Energy's project. I think that's a very different project, and so if you're trying to achieve supply diversity and create a portfolio and make sure that you can kind of balance your long-term supply mix, I think there's a spot for the U.S. projects, but I don't think that they're direct competitors per se against the Canadian projects. I think the Canadian projects benefit from this great advantage that you can, if you get the upstream part right, you're going to have this long-term, plentiful, cost-effective supply of natural gas as input into your facility. And so costs are going to be critical, but I think that's where people are going to be playing that. Secondly, and Jock, you talked about this is really important that people forget, actually Canada's overall tax regime is more competitive than the U.S. regime today. So if tax matters to Canada, and it does, it's critically important to these long-term projects. Structurally in the U.S., they have a structural disadvantage in sort of tax rates in the U.S. that isn't going away anytime soon, because they have a structural budget deficit, to Jock's point, just like some provinces in Canada do. Right?
Ron, if I just add on that, something that I haven't heard discussed in the context of LNG, a bit of a wild card, is the Canadian dollar. And particularly for companies like Greg's looking at potentially a very long-run, major sort of investment decision, you've got to have some sort of notion of what the exchange rate is going to be. And I would argue strongly that the long-run equilibrium outlook for the Canadian dollar is actually in the 80 to 85 cent range. That would be most sort of economic models would kick out numbers. I wouldn't necessarily bet my mortgage on it, but it's from a long-run point of view, after I'm retired and no longer accountable for what I'm saying right now, I'm quite confident that it'll be in the 80, 85.
You'll be right sometime, Jock. But you'll be right sometime.
So I mean, I don't know. I'd love to know what these big companies, as they're doing their kind of internal planning, are assuming, not so much about today's value of the Canadian dollar, but frankly out to 2020 and beyond, because I think it could have a material impact on how attractive we look for certain kinds of industries relative to the United States, including LNG. So keep an eye on that. I wouldn't be surprised if in the coming sort of 6 to 18 months, we see this currency issue, which is playing a big role in where a lot of manufacturing capital is going in North America these days, starts to surface in the context of energy investments as well.
Good point, John.
Ron, can I just want to add one thing, and again, it comes back to this concept that a significant part of the capital is going to be invested in the upstream, and I think that really, in fact, creates a tremendous opportunity here. When you talk about the ability to put the scope and scale of capital that we're going to be putting into the upstream, and that's going to start to drive down costs overall. It'll be about our ability to manage really what is a significant logistics project, obviously moving people and products, drilling rigs, service rigs into these particular areas, building, basically building larger facilities in these particular areas to really take advantage of the scale of midstream facilities. And I think that's going to help continue to drive down costs. Whereas if you have an exposure to just buying on-grid gas and being a former gas marketer, you've got that exposure to what might happen with indices risk. Certainly, you have an opportunity in North America to hedge a lot of those sorts of things, but that certainly is a risk longer term. I think is the inherent volatility that we see in North American natural gas prices, as we've lived through. Most of us in our gas marketing careers have lived through.
Doug, I've got an audience question here directed towards you, and the question is, once the BC gas is unstranded and can get offshore, what will that do for domestic prices, and what's the impact of that?
What do you, Doug?
I'll be trite and say if I knew that answer, I probably wouldn't be sitting here today, but I'd be in the Bahamas somewhere, hopefully. Anyway, we look at it from the long-term perspective. We think there's enough resource out there that will get developed as the demand goes. We've seen that over time, and prices bump up and down. Definitely, we're still something like half where we were in 2008 with prices that people are seeing. So when we look at what other experts are telling us in the long-term look, we think that over time we'll see that some stability in prices. There will be ups and downs, definitely, in the day-to-day markets, as Greg has said, some volatility. But I think we'll still see reasonable prices versus what we saw, say, 5 or 6 years ago for the future. And again, I'll probably be retired by the time somebody can come and chase me on that.
Well, you're both being recorded.
I'll get together with Jock and we'll
Not in the Bahamas.
yeah.
Jock, anything to add to that, or?
Well, I mean, it's interesting in the U.S. context where there's a fairly robust domestic debate going on in Washington about exports of energy. Gas is part of it, oil is also part of it. There has been quite a strong push from some parts of the U.S. energy-intensive manufacturing sector to throw a caution out there. So it kind of depends on how big your resource is. Ours is so huge, frankly, and the scale of it, when you get into studying it a bit and you're not from the energy industry and sort of actually sit down and map it, it's truly kind of overwhelming. So I don't see that as a concern in Canada, but it may be something that constrains U.S. kind of export potential going forward in a way that we won't necessarily experience in Canada. So that's another dynamic thing to keep an eye on.
Greg, I want to get back to something that you said, and Barry raised it earlier as well, and this is just the impact of the upstream spend on the overall projects and project decisions. The numbers for that, I think we talked about that before, but significant capital is locked into the upstream spend as opposed to the other parts of the project. So how does that play into the advantage here in BC? Is that a positive relative to other markets?
Yeah, I think it's a real positive. The unconventional resource sector in Western Canada is very well developed. I know there's a lot of chatter out there about fracking being new, but we've been doing fracking in Western Canada for decades, and we've done it well and we've done it safely, and we will continue to do it well and do it safely, and that's largely because there's very strong standards in place that we as producers must follow through on. But I think at the end of the day, when you look at the upstream sector, we've got a very well-developed service sector that continues to find ways to coax more resource out of the rock. That's why there's not more gas in place. We're just figuring out ways to recover more of that particular resource. And as we continue to do that, we'll continue to drive down costs. And I think that will continue to be an advantage. So when you look at a project like ours, where you've got your partners integrated right throughout, effectively our partners today, our offtake partners, who physically have a need for that LNG, have effectively hedged their gas exposure. And the lower we can drive down that cost, obviously, the more we can improve the economics. And part of driving down that cost is obviously ensuring that we have a royalty regime in the province that really incents that development of that resource. And the province of BC has done a tremendous job, I think, by incenting the industry to come in through deep drilling royalty credits, infrastructure credits, road building credits, all those sorts of things that have really opened up the sector. The service sector has come into Northeast BC, has planted themselves there, and I think we've really seen Northeast BC flourish because of that.
Ron, I would add that the great advantage of unconventional resources, which is really the BC resource base, or maybe it's conventional now, maybe unconventional is really conventional, is when you have a multi-year development opportunity, you get focused on driving costs down through facility design, project design. Pad drilling is going to change everything. Automation is going to increase safety and reliability and all those things, and that's what will drive costs down. And so that will be, I think we're going to find in the world of abundance as opposed to scarcity model, that costs are going to be kind of the unrelenting focus.
Well, I think that's going to bring our time together to an end. It's been a fascinating discussion, and I'd like to thank each of the panelists for their insight today. It's been very useful, and thank you very much.
Thank you, Ron.
Thank you.